There we go.
So you're going to edit it all, right?
No, I'm going to make you look really bad. All right, so welcome. This is Anthony Vitale with the Vitale Group. And you are here because you want to be, right? I don't know. So anyway, this is Brian Woltman, and he is with Embrace Home Loans. And he's actually the first business we're going to work with and making videos. So what are you seeing right now in the real estate industry and what you're doing?
Well, you know, right now we're still in that area where there's very limited inventory and there's a lot of buyers.
Right.
You know, one thing I am running into is a lot of realtors are reaching out to me, asking me to put a second set of eyes on customers' pre-approvals just because.
I'm one of them.
Yeah.
Right.
So just because people just aren't, you know, being pre-approved the proper way.
Right.
And, you know, when you start this process, you really need to have, you know, you got to really have a stance as to where am I right now? You know,
Right.
you're going to be in one of three places. You either qualify and full steam ahead, we're good to go. You either qualify, but, you know, maybe if you did this, that, or the other thing, you'd be more qualified, okay?
Right.
Or you don't qualify at all.
Right.
And you really need to know where your starting points are. Because if you don't qualify, you know, you want to make sure you know why and how we fix it and how do we get to the point where you can buy a house, right?
Right.
And I find that a lot of, you know, these online lenders or, you know, these brokers with the, you know, the lowest rates on the street,
Right.
they're not taking the time to put the eyes on the documents that are necessary. I have people that come in my office and say they're pre-approved and they don't even have their credit ran.
Right.
It's very interesting to me. So, you know, typically, you know, there's three things we need to look at at all times, all right? You need to look at your income, okay, which is going to be the W-2s, pay stubs, in rare circumstances, tax returns. So,
Right.
you know, nowadays, you know, only need tax returns if you're self-employed, if you're paid by commission mostly, or if you own any rental properties, okay? Otherwise, you know, W-2s and pay stubs are good enough. We need to look at your assets, come up with a plan as far as, you know, where the money is going to be coming from for your down payment, your closing costs, whether it's coming from a gift, from a 401k, from your savings, whatever it is, okay? And then we also need to look at your credit. You need to see not only what your score is, but what your monthly obligations are to make sure you can afford the payment that you're trying to, you know, of the house that you're trying to look at.
Right.
So,
And what percentage of their income would you recommend?
So, you know, that's a tricky question. So, you know, typically rule of thumb is you want your, what's called your debt to income ratio to be somewhere right around, you know, 35%. So 35% of your income to be, you know, delegated towards all of your monthly debts that's on your credit report and your house payment, right? But in this state with the taxes, right, that's not always very possible. So, you know, maximum limits are 45 to 50%.
Oh my gosh.
Yeah, but you don't want to go that high if you don't have to.
That's funny that you say that because, you know, I work with a lot of young people, a lot of millennials, and they're young to me. And I'm always telling them 25% because I'm worried about what's going to pop up, right, and lifestyle, right.
Well, see, that's the thing. So everybody's different. I have some customers who, you know, don't want their mortgage payment very much because they want to travel. Right. But I have some people who love to throw parties and love to have house parties and they need that house for entertaining, right? Right. And each person is different. But the important part is that, you know, in this state, like I said, the taxes are so expensive that makes up a good portion of what your payment actually is. So that's really going to drive, you know, how much your payment is more than anything else, so, honestly.
And what's great is, just so you know out there in video land, is I think you've turned 4 different renters that have come through the Vitale group now that are shopping. Right. Because they thought that, oh, all I can do is rent. Right. And when they actually came in and got educated on it, they found out that it's actually would behoove them to buy, right?
It's all about educating the customer. That's exactly what it is. They had no idea that, you know, by the time you put down your first month, your security deposit, your last month, that's the down payment.
There you go.
Right? I mean, that's all you got to do is just come up with the closing costs and you're all set. And it can come from a multitude of different places. So, you know, it's all about having the conversation and educating the people that you're working with. And it goes a long way and people appreciate it.
Yeah, and that's why we work with them. Yeah, thanks for coming. We appreciate it.
Thanks for the time.
And thanks for coming in and checking us out.
Anytime.
Right? God bless.